Hey everyone, I'm Elysabeth Alfano. Thanks for being with me on the Plant-Based Business Hour. So ESG, it is all anyone can talk about: environmental and social governance, investing. What is it? Why is everyone rushing to these kind of funds? What does it mean? And let's find out. Let's get into really the heart of it. I want to bring in my guests today from Karner Blue Capital, Andrew Niebler and Vicki Benjamin. Thank you both for being with me.
It's my pleasure.
Thank you.
The shortest of short introductions. So Vicki is the CEO of Karner Blue Capital, and prior to that, you were with Calvert Investments and KPMG. And Andrew, you are the vice president, co-founder, and you have a long history of being a securities law attorney and exchange trader, international economist at the Federal Reserve Bank of New York. Oh, how fun. So I'm happy to have you both with me, and I want to dive into it. Right before this interview, we were talking, and Andrew said, oh my gosh, ESG, it is like the wild, wild west. For people who may not know, let's start with the very basics. What is ESG investing?
I'll take this for a little bit. ESG investing is the incorporation of the three pillars: environmental, governance, and social. These are considered categories, if you will, of criteria on which companies are measured and benchmarked. So one can start out with a history, if I will, I'll digress just a little bit on how ESG came to be, and then I'll continue a little bit onto Karner Blue Capital, if I may. ESG started really in socially responsible investing and has its roots in religious investing, and the fact that restrictive investing methodologies were applied by the Methodists. So they would not invest any of their parishioners' donations in anything they considered a social ill, such as gambling or liquor. Fast forward into the 1960s with Ralph Nader, socially responsible investing started to approach. And that's when, so for instance, Ralph Nader introduced 3 resolutions on the General Motors proxy regarding, for the most place, worker health and safety. That was the first time that had been done, a socially responsible initiative placed on a corporate proxy. Fast forward another 10 years, Calvert, arguably the oldest and maybe one of the largest socially responsible investment firms, launched its first retail product, the Calvert Social Index Fund, into the retail universe, and it was a mutual fund centered really around moving forward good companies and centered specifically on the theme of anti-apartheid and moving forward social equality and racial equality. That brought in a lot of entrants, mostly in the socially responsible investment space, to incorporate metrics to judge companies by. So then it wasn't much further behind when this started to gather a little steam, although not a lot. But, it gathered, I would say, a couple of trillion in assets. Vendors started to realize, hey, we're getting onto something. People are starting to wanting how to hold companies accountable for their actions. And the way to evaluate them is through these metrics. And then you saw proliferation of vendors that came in with metrics centered around the 3 topics we started with: environmental, social, and governance. So mostly governance is centered on board constituencies, environmental, mostly about what's reported because of SEC rules surrounding greenhouse gas emissions. And then social policies mostly center on workplace, recruiting, hiring, anything that's publicly available. Mm-hmm. So you see that so now folks can go out, and asset managers pull automated, there's probably 1,000 vendors out there with ESG data that they data mine, publicly available information, and then are able to integrate them into portfolios or models to determine which companies they want exposure to. So especially with what's going on against the backdrop of climate change, social justice, and what I think is particularly cumbersome and very scary, provocative, is income inequality. Against the backdrop of all of these social and environmental issues, the evaluation of companies is becoming very important to investors. And especially with the younger investor, as we all know, the millennials are inheriting a lot of money from us.
Right.
There's a big transfer of wealth. And with this, the invention of the internet and the proliferation of information, the integration of that into investment strategies, we're going to see this become a bigger and bigger trend. So, Andrew, I don't know what you want to add to that, but I think that's.
The only thing I would add to that is I think where we're headed now is what is becoming much more popular are some of the thematic strategies. So they're building on what Vicki's described. They're taking that ESG analysis and then they're looking at, okay, what can we do and slice and dice this a little bit more from the perspective of specific themes that address particular concerns. And in part because what was happening with a lot of the ESG that Vicki was just describing is became a little bit of an alphabet soup on some level, where you have a great E company, but maybe not so great in G and S. Maybe you have a great G, but they're not so great in the other two. And so at some level, some of the ESG strategies were winding up from an ESG perspective, being a little bit more middling. And what you can do is if you focus in on the theme, on a specific concept, then you can really try to identify outperformers on that theme and avoid a little bit of that alphabet soup.
Yes, and it also seems that what you're talking about, they're really broad issues. So you might not be able to address specifically animal welfare issues just through environmental issues, if you will. You might not necessarily be able to address biodiversity through environmental issues. I see Vicki has her hand. Go ahead.
So hence the problem. As Andrew's alluding to, when we started Karner Blue Capital in concept January of 17, we went out and surveyed all of the ESG vendors and found very little data, Elysabeth, as hard as it is to believe, on animal welfare and specifically on biodiversity. So on animal welfare, virtually the only thing reported was, do you test above legal requirements on animals? Mm-hmm. So most of the animal-friendly investing was based on the pharma industry, virtually eliminating restrictive divestment. Biodiversity, not so much, because the impacts, no data other than maybe perhaps the inclination to have a biodiversity impact plan on your operations. So when you think about that, that was the reason ESG strategies back in early 2017 really couldn't properly incorporate the investment risks relative to poor animal welfare and poor biodiversity destruction management principles. So investors weren't able to evaluate those risks.
Yes, and I'm concerned that it's one thing to say you have a policy, and it's another thing to actually execute that policy. So again, before this interview, we were talking about things like certified humane labels. Again, my interest is animal welfare, but obviously also the environment and biodiversity and social governance. So, it's one thing to have a policy in place and you say, okay, well, we don't abuse animals. And it's another thing to really, then decide you're not animal testing or, like it's obvious that Microsoft isn't going to be involved in the fur industry. Okay, so they've probably got a pretty good policy about fur, but other things can creep into the system. And how do you really? I know there are those markers against which the benchmarks against which they're judged, but I wonder how strong they are and how well these programs are implemented. Can either of you comment?
Do you want to take?
Yeah, I'll start with that. I mean, I think that's an excellent point, and it's really one of the concepts that's behind how we tried to approach our thematic biodiversity strategy. One thing, what we really do differently is we start out by trying to create an investable universe comprised of companies that are exactly in the bucket that you just described, which are those that are not just saying, that they're actually walking the walk and talking the talk, and not just saying that they're out there doing these things. And so we have identified in the process of doing our research 14 industries that we think have clear biodiversity impacts, have material biodiversity impacts. We've developed models that we've used that are built from key performance indicators that we feel help assess how companies are performing with respect to biodiversity, not yet with respect to financials or anything else, but with respect to how they're performing in biodiversity. And then after that, we are able to identify companies that are outperformers in their industry and leading their industry. So
I think Elysabeth was kind of asking us how we evaluate how those companies perform against what they say they do. Is that right, Elysabeth?
But both. I mean, I think both is good knowledge to have as we really kind of unpack what ESG is really, because I'm afraid, like I was saying before, that it's going to go the way of like, oh, what is natural? What is organic? Well, now it's just a marketing slogan on a package. So I just hope ESG doesn't go there. And I'm glad we're unpacking this topic. So yes, that's what I was asking Vicki, but I'm also loving hearing what Andrew's saying, because I think it's interesting. I think you said you had 14, or did you say 12?
14.
14.
And we're constantly looking to expand that. We're expanding that a little bit as well as we identify additional industries. But at the end, these are industries that we've identified as having material and biodiversity impacts. And then we can go through the research process in more detail, but I want to give Vicki a chance to actually address the other component of your question. So
I was going to speak more globally around ESG and how you measure actual companies' performance against what they say versus what they do. And it's really very relevant to what we're talking about at a topical level. So you can have firms out there saying they're integrating ESG, and yet the firm itself is not run in ESG principles. There's not a representative of diversity. There's not good environmental policies, yet they are out selling ESG policies. So you can think, Karner Blue, for one reason, that's one reason our firm is started out and always will be a certified B Corp. So I like to put that aside when we talk about ESG strategies and how there's can be an inherent controversy or oxymoron in that. When we're evaluating companies, we have to look at their policies. And you're absolutely right. Not always will a policy behavior follow a policy. And how most firms can evaluate that with the internet, the dawn of the internet and the internet highway, the availability of information. So controversy monitoring is anybody's method of evaluating how firms performing. So I'll give you an example, Elysabeth, and I'm sure you'll recognize this. Back last summer, Nestle was in our portfolio, and I can only speak to Karner Blue Capital at this point, but Nestle was in our portfolio and was given high marks for how they evaluated their milk supply chain. Shortly in the middle of the summer, Nestle, one of its suppliers, was caught in Maryland abusing horrifically a dairy cow.
Yeah.
That went viral. You probably remember. It sickened you.
I do.
It sickened me. I couldn't watch the tape.
To the core.
We were going to divest of Nestle. It was one supplier out of thousands. Mm-hmm. And called them up and we said, what are you doing? Well, we fired the supplier. Well, we're reconfirming our policies with all other suppliers. And it's really controversy monitoring. And then you're looking at their policies, and what they do comes out through activities. And if they're doing things that are harmful, it's going to get back, especially with how the internet flow of information.
Mm-hmm. Well, herein lies the joy, in that our money has so much power, and the way to really shift how people act, and I say how people, but I mean corporations and just people as well, is to shift that money. So it's just a tricky business to be investors and to be police, because it's, they shouldn't be having an ESG. This is why I'm wondering if there's going to be any regulation of who can claim that they're have ESG policies if they actually aren't.
It's ongoing right now. That the SEC is in the middle of a sweep of prospectuses and reviewing those who claim they incorporate ESG, and then trying to determine what exactly that means. So it'll be interesting to see, especially with the Biden administration coming on, what exactly, how you define that. And then, of course, the DOL came out with a recent bulletin right before Thanksgiving on a Friday, saying fiduciaries can no longer consider ESG metrics when evaluating investment decisions. It cannot be using the prudent financial person rule. So we're hoping President Biden will also fix that.
And can you explain the rationale? I'm sorry, I'm not sure I followed the rationale beyond why that is no longer allowed.
Andrew, have you been?
The basic premise that the DOL is arguing is that in order to be a true fiduciary, you can only consider financial considerations, and they're essentially trying to argue that ESG is not a financial consideration, which really flies in the face of everything we know about ESG, because these are companies that, if they're taking these issues seriously, are really preparing for tomorrow and ideally putting themselves in a better position financially relative to their peers and competitors in their industry. So this is an issue at the DOL that's gone around in circles. The pendulum swings, and right now the pendulum is on the wrong end of the scale, and hopefully it'll get fixed. But it was the original concept that was coming out of that process was pretty hardcore. It got a little watered down, so it's not quite as bad as it could have been, but it's still pretty bad.
And I'm wondering, do you counsel your clients to do their own research? Because, again, you can't be policing everywhere. So I'm wondering, to avoid people just saying, oh, check, it says ESG and therefore it's good enough for me. Do you tell people to really dive into the company? I mean, I know that's what you provide for them as well. Most certainly that's why you have your key performance indicators and you do your research, and that's a lot of what you offer. But when you work with clients one-on-one, I'm wondering, one, if you advise them to sort of stay on top of these companies and their social policies on the internet and on Instagram, see what they're doing. And two, how driven are people to really put ESG first?
I'll start, and Vicki, you can pick up where I leave off, I guess. So the answer is yes. And what we try to do at Karner Blue Capital is really, there's three legs of the stool, if you will. One is value alignment. So we try to create portfolios that are well aligned with our investors' values. The second is engagement, corporate engagement, where we try to engage with companies on issues that are relevant to the portfolio that we're managing, and the issues that we want to make sure are reflected in that portfolio. Mm-hmm. And then to answer your question, the last one is really investor education. We really feel strongly that in order for the world to move to where we think it needs to be moving, consumers need to do their share, and they need to be educated. And every time everyone makes a purchase, they're speaking with their money, with their wallet, and it's essential that they do that work. And yeah, it's hard to be an informed consumer, but it's really essential to get to where we want to go.
Mm-hmm. We talk about that all the time on this show. Your dollars matter. And when you align your purchasing power with your values, you will see a change in the world, because everyone will run circles to get your dollars. They don't really care what you say or do, but boy, do they want your money. And so if you hold true to that, you're going to see a shift, which is wonderful. I think, Karner Blue can't be the policeman of the world. Everyone has to be out there looking, watching, paying attention, and doing their part. And that just might mean tagging them on Instagram or what have you, putting the pressure on. But everyone has to do their part, I think, for real change. Vicki, I see you wanting to hop in there.
Well, no, I just know that some of our investors, it's really amazing, especially the folks that are concerned about animals or biodiversity. They're very used to being given canned answers. Well, the fund isn't in pharma, or we don't invest in Tyson's, or we don't invest in McDonald's. And they look for these canned answers that most advisors would give them. And I would challenge them to say, if anybody asks me about companies in the portfolio, we have exposure to companies in metals and mining, for instance, I can answer that. Every company has a story, and it's not necessarily a story that they don't do something. It's really what they're going to do or what they are doing. Mm-hmm. So I like to say that we are a company not of looking backwards at ESG, which I feel like ESG, if you think about it, Elysabeth, is a balance sheet of company performance. It's what you did last year or sometimes 3 years ago, your ESG emissions. I like to see, what is the company planning on doing? What are they inventing for the world and animal life, flora and fauna, to live in a post-climate change environment for humanity to survive? Biodiversity represents the underpinning of society, honestly. And you have to be able to answer, well, where is this? Is this the portfolio of tomorrow that's going to help us guide us to a better future for not just us, but all living beings.
Mm-hmm. I love that you say this, because a lot of people might move forward with do no harm, but I think we're sort of past that. You have to do more than do no harm. You actually have to be creating good. You have to be changing systems that don't work. We could have a whole conversation about the food supply system. We'll save that for another show. But, you have to actually be making progress for the future. It's not enough to just do no harm. So I love that you say that. I wonder if you could give me your, I'll say predictions. We're going to come to some other predictions at the end of the show, but I'll say for investing in, let's say, straight up vegan companies. That's basically, I'm talking about plant-based foods. And of course, there's plant-based leathers coming and plant-based wool, et cetera. But is there a sense of frustration from the consumers that you deal with that there aren't really enough companies out there to put together, let's say, a vegan food fund?
I could take that, or Andrew, you can take that.
I would say there aren't right now, unfortunately. A lot of the innovation that is happening in that space is coming from smaller private companies. There's several that are reinventing textiles, from the plant-based textiles that are really doing innovative work. There are some public companies that also do innovative work with pineapple leather and that kind of stuff. So it's it can be, you can find the companies, but to create a thematic strategy that you just defined as that vegan strategy is really hard to do. We do have a vegan, so we thought about this. We actually put a lot of time into thinking about this issue, and we wound up coming up with a different approach, which was sort of a momentum strategy to try to think about the future. How are companies of today going to get us to the place that you described tomorrow?
Mm-hmm.
So I'll take a little different approach on this one, because I've thought a lot about it. If you look at the evolution of veganism and vegan food items, clothing items, and you follow the trajectory, say, of tech, it takes a long time to incubate new ideas. So Amazon's been around since 2008? It just got scale. Mm-hmm. So I feel like these trends are getting scale much quicker. Mm-hmm. But there's a waiting period. They need to incubate. They start out as small companies, like all public companies do. They're moving into SPACs faster than other types of products. An alternative to go public faster. So it seems to me that their trajectory is faster than a normal product. I think we're also seeing that veganism was up and down between 5 and 7% of the population. Now you have virtually 100% of the population recognizes they have to have more plant-based eating. Right? There's not anybody here that disagrees. I'm not one of those people that says you have to be A or B. I think we all have to move down that continuum. Where you are depends on who you are. So there's an appetite for these products, and that's encouraging and facilitating development. And there's now alternative ways of going public that make it faster to get to market. It's just a matter of getting scale. But as you know, and as Andrew mentioned, many of these larger public companies are the only ones that have the distribution capacity to get these products to market, like Burger King, right, with the Impossible Whopper. So much like fossil fuel companies, they're the ones that have the distribution capacity and the channels to get renewables to the consumer. Mm-hmm. So if you're looking for, I think the investors have to either A, be patient, or B, be able to accept that Burger King is in their portfolio and it's a vegan momentumizer, or McDonald's with the McPlant is in their portfolio. And then eventually, I mean, if you want to invest in venture, there's, I know a venture firm that just does plant-based products, and they can put you in the small companies and help those companies accelerate into the private and to the public world.
Mm-hmm. Risky business venture, for sure. And
maybe not with the appetite. The demand is going like this, right? So
demand is, but you still got to believe in that team. That CEO has to get it there, and you've got some time, so it's not liquid. So
you're speaking to the choir.
That's right. A totally different vehicle, but out there really with lots of options. So while you haven't seen it in the regular market yet of how many plant-based foods or plant-based leathers are out there, there are some, the two of us could tick off 10, 12, et cetera, if you put together the Israeli stock market, the Canadian stock market, the American stock market, et cetera. But, not that many. But if you start to look at venture capital opportunities, there are small plant-based businesses and leather businesses popping up all the time. So, but I want to go back to something that you were saying that I think is very interesting. I know myself, people are always saying, well, why don't you invest in Maple Leaf, JBS, Nestle? They're all moving towards Nestle's got Sweet Earth. JBS has their own line of plant-based items. I think it's called Plantera. They have an innovation hub center for plant-based items. Maple Leaf bought Field Roast and Light Life. These are longtime vegan brands. Light Life around for 40 plus years. So why don't you invest in them? Because they're obviously going that way, and I can't bring myself to do it. Light Life represents a small part of Maple Leaf still, and so. Nestle's got a long way to go. I don't know. I wonder I guess you're telling me that you are looking for momentum and you're looking to the future rather than the past. So would you invest in these kind of things?
Well, in some cases, yes, for some of those names, largely because I think we can't get from where we are today and magically uproot ourselves and plant ourselves in the future. So
you're right.
A company like McDonald's that is bringing in a whole McPlant lineup to their menu, and actually seemingly doing battle with Beyond Meat in terms of who's going to get the preference on their menu in terms of naming. But that's progress. That's moving in the right direction. And would I consider would I reevaluate McDonald's? We reevaluate McDonald's constantly. Will I reevaluate McDonald's now, and will they perhaps get a higher sort of rating in mentally or in our process? Sure, I think that's fair. So I think there's got to you have to chart a path from where we are to where you want to go, and identify those that are not going to help get you there. Ignore those companies, and then say, okay, these companies, well, they're doing something, and maybe there's a middle group that they're doing something, but they're not doing enough. And then the companies you really want to be, associated with are those that maybe aren't doing everything they can, but are doing a lot, and those are the ones that are going to help chart that path to the future.
So just to add to that, and it goes back to a point we made a little bit earlier, I have a three-part answer to that, and I think that you as a sophisticated or educated investor would know how to answer this. So let's take, for instance, Tyson's. Everyone hates Tyson's. And Tyson's helped fund Beyond Meat.
Of course, yeah.
There's a yay for Tyson's, right? They owned a 10% stake. So then we evaluated them on their animal welfare criteria. So they have a little piece of business in Beyond Meat, but how do they treat animals in general? Not great. Then we do the third piece, which I mentioned before, controversy monitoring. And that's when it's all over, right? Mm-hmm. They've got so many animal cruelty stories about them and instances they haven't fixed their supply chain. And we said, okay, so you own a piece of Beyond Meat. You obviously see that as a marketing opportunity. You see that as a future. But do you care about the ethics surrounding animal life? Probably not. You see this as a business opportunity. And we feel that you have more of a responsibility over the animals in your supply chain than that. And so Tyson's was not allowed in. McDonald's a little bit more complicated. They are certainly going to distribute the McPlant burger, get it out there faster, bigger footprint than Burger King. Much better animal welfare policies, going cage-free much faster. They look good, and then you look at their controversy, and they still haven't fixed completely their supply chain, but they're getting it. So let's see where they are next year. That's what we want to do, is move them forward, because as someone asked me, why do you do this? And I said, it's so you get one sow out of a gestation crate. I said, I get one sow out of a gestation crate. There's a big difference to that sow.
Yes. And there's so much there to unpack, so much that you have said. Yes, we're constantly moving and evolving. So it would make sense that you would continue to analyze these companies and look at what they do. It gets even more complicated with something like Tyson, because they didn't just invest in Beyond Meat. They also have I'm getting the name wrong, I'm sure, but an innovation venture arm. So they look at other ways to invest, and they are currently invested in New Wave Foods, plant-based seafood. So, there is that, but it seems to be driven for one reason only. So, I just don't want to comment on that anymore, but yeah. Okay. So it's tricky business. It's hard to get those 100% companies that you love. And I'd love to see us get to a place, and I know we will, that green energy is, where you can have green energy ETFs and you're like, hey, I like every one of these companies. And, you feel good about it. So, and we'll get there. And I don't want to belittle the fact that we do need these big companies and their distribution chains. We also need their advertising dollars, because as soon as they start having enough products, not like one tiny little product over here, but a 50%, let's say, of their product line is vegan or plant-based, or however you want to market it, you're going to start seeing the advertising campaigns come through that look how manly it is to eat plants. So I'm waiting for that as well.
Absolutely.
Okay, so much to unpack here, but I do not want to get through this interview without mentioning that you, and also a lot of other investment banks, if I don't have this incorrect, have taken a Finance for Biodiversity pledge. Tell me about that community, because I'm excited to see that it's not just you and not just me who thinks this way, but there are more important players trying to shape the landscape. Tell me about that.
Do you want to start, Andrew?
No, you led this project, Vicki. So I'll let you lead the discussion.
Everything in tandem. I call him and his wife, Beth, my significant others.
Vicki did a lot of heavy lifting to make this happen. So she deserves this.
We were a provisionary signatory to the UNPRI. Principles of Responsible Investing, even before we had assets. And we were contacted through them about the Pledge for Biodiversity back in September. And for whatever reason, we were late to the party. I mean, our whole firm that is the mantra of our firm. That's its mission, is improving biodiversity, environmental stewardship, and animal welfare through moving the capital markets. And so we signed up for it, and then found out that there was a funding ability to be able to fund it and really push it forward into the U.S. because it hasn't gotten the kind of oomph you would have expected in the U.S. And so after the signatory time was out, I sent it out to a lot of socially responsible investors, CEOs that I knew. There were 2 U.S. firms that signed. It was us and Amy Domini and Domini Investments, another SRI firm. And then there was 24 others in Europe. 12 of us made a nice video that was played in front of the General Assembly of the UN. And basically, it gives a time frame of 5 years to implement biodiversity indicators into finance decisions, and those finance decisions surrounding your investing strategies. So you're basically putting the A and B in ESG, animals and biodiversity into ESG, and integrating those into your investment strategies and also your financing decisions. So you're not going to, perhaps you'll consider when lending, if you're a bank, to those companies that, for instance, one of our pet peeves, one of our major pet peeves, drill in the Arctic and deep ice. So so excited to do it. And we are actually working with Iceberg Labs to develop indicators that can be put into ESG data sets. And because we do have some of that data, and we're so happy, competition is a great thing. It'll be great to bring so much publicity to this. The world needs to know that we're at risk of losing 1 million species very shortly, and a quarter of species are all threatened by endangerment and endangered. And in the backdrop of climate change, this is going to be. We need to get this fixed. So with the UN helping promote this, we're really hopeful and bringing more investment advisors on board. And Andrew, you might want to add to that.
Well, yeah, so I think it's interesting that sometimes we get the question, why are you so focused on animals? Why do you care so much about this issue? And the answer is we care about animals, certainly, but a lot of people don't realize is that they know about climate change, but they don't realize the statistics that Vicki just mentioned and the biodiversity crisis that the planet is going through right now and the rate of extinction that's occurring. What they further don't realize is the connection between ecosystem services that are provided by biodiversity and our economic progress and current level, economic level that we're at. Essentially at this point, the World Economic Forum just recently, for the first time ever, came out with their most likely economic risks over the next 10 years. And for the first time ever, the top 5 were all environmental, including major biodiversity loss. So, people don't realize that half of the world's GDP is either moderately or highly connected to the ecosystem services that nature provides. So if we don't solve the biodiversity problem that Vicki just described, all the other things that we're doing are not really going to matter that much, because this is sort of and the only reason I got onto this is because one of the key things that the pledge does is it makes the statement that biodiversity is really the most resilient thing that makes human progress go forward. It's the basis for human progress.
Mm-hmm. Yes, if you don't have a healthy ecosystem, you don't have a healthy planet. Without a healthy planet, you don't have healthy people on the planet and healthy business. It's just not possible. They all have to work together.
Absolutely.
Jane Goodall does a wonderful job of explaining the triangle that happens between the planet, animals, and humans. And really all 3 legs of those of that stool need to work together. Otherwise, it really falls apart. I'd like to talk a little bit about the consumer again that you're in touch with. Are they understanding the biodiversity issue beyond? Sometimes I think people have the umbrella of we want to do things that are good for the environment, and they're thinking maybe let's not pollute, et cetera. Are they understanding biodiversity loss? Because I think, if I'm not mistaken, we are in the midst of the 7th largest mass extinction.
The 6th largest.
Thank you. 6th.
Yep.
So are they making that connection? The consumer?
I think that thankfully the UN has brought it to light. There's a lot of other stuff going on now, right, Elizabeth? There's a lot of concentration. We have a lot of issues. People are now understanding climate change. That took a long time. Scientists have been talking about climate change since Bill Clinton. I mean, the first indication of climate change came out in that climate change report under Bill Clinton. 25 years. So that is finally indoctrinated. And now we have COVID. We haven't even talked about COVID. Yay. Oh, wow.
I know. It's time to get a break. Oh, my gosh.
Does that ever happen? So you have COVID, and then you have all the social justice issues that are going on. So we are getting the message out, and I think people are starting to understand it, and they're linking it to climate change. And it's an interesting thing. Climate change and biodiversity loss are very much linked, but 2 different discrete issues. So climate change, as we all know, is caused singularly by human activity, and biodiversity is caused 35% by climate change, but the rest is by human activity. And that is mostly due to change in land use related to deforestation. So habitat destruction of biodiversity and of animals. And so people are now saying, oh, wait, climate change. So what's going to happen with all these droughts and floods? Mm-hmm. And you have what's going to happen to the animals? And then now it's starting to click. Mm-hmm. So it's good that it's linked, but people need to understand that it's there are 2 different discrete issues. Mm-hmm. And I mean, I was talking to a scientist from the Amazon this morning, and she was heartbroken with what's going on down there, and because of the politics down there, and there's such a land grab for Amazon. Yes. And it goes to 3 things. She said: ag, logging, mining. And she said they're going into indigenous people's land, and because of the current administration they're getting away with it, and it's just heartbreaking. So, we got some work to do, and I think people are starting to get it, but there's a lot of other issues that are taking their attention.
And there's a lot going on for sure as you started the conversation, but it's wonderful that you're helping people to understand that a lot of that biodiversity loss does come, as you say, one of the three pillars, from the food supply system, because we're cutting down trees to grow grains that have protein and fiber. Do we give that food to people who need it? No, we give it to animals, and then we give them land and water and time, of course, because they need it. Cut down more trees, grow more grains. Do we give those to people? No, we still give them to animals who still need more time. It's just the most inefficient system for a planet that is going from 7.6 billion people to 9.8 billion people. That's probably low, but according to the UN. Yeah. So you're getting 1/3 more people on the planet. You're not getting more land, and you're not getting more water. So you do the math on the back of a napkin, it's pretty much not going to work. So I'm glad to see that you're out there helping to make that connection for people. And I do understand a recent study from Food Navigator, a recent quote of a study in Food Navigator said that 62% of millennials are starting to make the connection that their food choices have environmental impacts. So I think that's interesting that people are making the connection, starting to a little bit, at least younger generations, that the food supply chain and your food choices in particular have related environmental consequences. Well, okay, so this seems like a natural segue because you guys are so deeply involved. If I could say, okay, what are your predictions going forward? Where do you see us going, let's say short term, like 3 to 5 years?
As far as
ESG investing and the shaping of the landscape for either more stringent KPI key progress and indicators, or how you see the landscape really shaping up for ESG regulation and investing, I guess. Let's go with that.
Maybe you want to go first, and then I'll...
Sure. In a nutshell, I think, as I said, I think the trend towards thematic strategies has just begun. So I think concepts like the one that we have here with the biodiversity strategy, there'll be additional concepts like that, because what they enable you to do when you think about a strategy like that, they enable you to avoid the problem that you defined earlier, which is if you have a very narrowly tailored, specific type of focal point, it's hard to build a portfolio around that anyone can invest in and sleep at night, because it's so highly focused that if it blows up, you're going to not be happy, right? So really, people are looking for the holy grail, the combination of a well-diversified portfolio that does well for the environment and people and the planet, and also produces returns, that they can normally get, that they're pursuing from a normal investment. And I think the way that you're most likely to get there is with those thematic strategies. So I would see in the short term that you're going to see a proliferation of thematic type strategies, maybe the kinds of ones that you even mentioned with the around a renewable strategy, all sorts of renewables, geothermal, wind, solar. You package that all together. You could probably, and those ETFs already exist to some extent, but I think that's the direction we're headed.
Yeah. Godspeed. Vicki?
I think that with the new administration coming in, that the incorporation of certain environmental risk, which ESG hopes to measure, for instance, GHG emissions will become actually, instead of just a reporting indicator, become a financial indicator, and therefore a self-fulfilling prophecy. So those companies that are the biggest polluters might be, because of the Biden administration, hit with a carbon tax, for instance. So it's going to translate really fully to the financial accounting line, and therefore drive assets into those companies that are certainly, I believe, more environmentally responsible. So you're going to see, I believe, a proliferation of companies moving towards better standards, and I think investor dollars chasing those. People are going to see with the change in regulation where their risky assets are, and it'll include fossil fuels, it'll include non-electric cars, I think there's going to be a lot of change out of certain normal sectors, travel, for instance, airlines, and I think it's going to bring not only good companies into the forefront in investing, but also better sectors and more innovation.
Again, Godspeed. And I'll just add to that it's interesting. I hope they add meat and dairy to that as
They are.
no?
They're working on it. They
There's
are
a lot of innovation happening in dairy, especially.
In dairy, yes, a whole nother show, but fermented dairy is here. It's not even the future. It's not even something we have to talk about. It's coming down the pipeline. It is here now. And so it's just a very exciting time. Okay, a couple of personal questions on the way out as we kind of wrap it up. I'm wondering if you can, like 2 or 3 sentences. I'll start with Andrew and then head to Vicki. What do you wish you knew 10 years ago that you know now?
That's a great question. I think for the most part, I would have really wanted to think more deeply about ESG. I started it was about 10 years ago, a little more than 10 years ago. I started at Calvert, so that's when I sort of transitioned and made the left-hand turn in my career. So I just would have liked to thought more about, I think, the types of innovations at that point, because I think that would have been a really interesting space to be in at that point in time. It still is, but that was a really interesting time.
Vicki?
I wish I had known more about climate change. I don't think I really understood it until about 6 years ago, and I think that it could have been integrated faster, and I would have changed some of my focus, I think, of my career, much like Andrew says. So we've got some catching up to do, and we're certainly going to do our share.
Thank you for that. Thank you for what both of you do and all the education that you put forth, in addition to the services you offer, and how determined you are to change and shape the landscape. But you do so much education. So thank you. A couple more quickie questions on the way out. So if you're having a bad day, and during COVID, some people have had a few, Vicki, do you have a phrase that you tell yourself to get yourself back in the game?
This is, and for me, this has been a venture of love. I really want to make a difference, and I really think somebody needs to use the investing space to speak up for wildlife and others. So I always say, I listen to the song by Miley Cyrus, "The Climb," and I listen to it it's a very nice song, and I know this is very corny, but it just says, you got to keep climbing, and part of the journey and the fun of the journey is the climb. No matter what happens, you just got to keep climbing. And honestly, every day for 2017, 2018, before I laid down, I listened to that song, and it would keep me going. And it's just, got to get to the other side. And we've got to, if we don't do this, who's going to do it?
Yeah, it's time to roll up our sleeves and get busy, people. Andrew, what's your phrase that you say?
So this is an easy one for me. I'm a Washington Nationals fan. Anyone who follows baseball know they went 19-31 last season, and then ultimately won the World Series. And the way Davey Martinez got them there was with a simple phrase: go 1-0 today. Go 1-0. You just have to go 1-0. So, and he took his team from 19-31 to the World Series, going 1-0. And that's it. If I'm having a bad day, I just got to do something to win today, and then I'll figure out tomorrow.
I love that. I'm going to use that. I don't know anything about baseball, but that's the first time I've ever heard that one. So thank you for that. One last question, Andrew, and then Vicki, one word answer. You are super busy. You're running around like crazy. You don't have time for lunch. What is your go-to snack? Andrew.
I'm sorry. That was for me. Sorry. Go-to snack. Well, it's interesting. I'm been not good with COVID in the diet, so I'm actually trying to improve that. So it's actually Greek yogurt right now.
I'm getting you to vegan yogurt. You just sit tight. I got you covered. Fermented dairy is coming.
Actually, I have dairy milk. My wife just bought me some dairy milk. So there you go. Already on my way.
Popcorn, not buttered. I'm a salt person.
I love it. Air popped popcorn with, if I'm being sort of bad, I'll do air popped popcorn with extra virgin olive oil and some salt. But if I'm trying to be super good, I'll do air popped popcorn with Bragg's and nutritional yeast.
Wow.
I know. Super good. That's one of my very favorite snacks altogether. I hate to say goodbye. There's so much we could talk about. We could unpack a lot of things here. So I hope you'll come back. There is, and as you say, the landscape is constantly changing, thanks to your work, by the way. So there's, when the Biden administration is going to come, I think we are going to see some rolling back of some things and some changes of some things. And as consumers become more educated, you're going to see that drive. So this is just work in progress, the wild, wild west, as we started out saying. So I do hope you'll come back. So much to talk about. If you want want more information about the Finance for Biodiversity Pledge, or just more information about the funds that Karner Blue does offer, or just you want to get in touch with Andrew and Vicki, go to, it's right at the bottom of your screen, karnerbluecapital.com. Of course, everybody's on LinkedIn like me too, so you can always find them there as well. Vicki Benjamin and Andrew Niebler, I want to thank you for all the work you do. Thank you for being with me. You guys don't go anywhere. Everybody else on all of our socials, LinkedIn, etc. I will see you Thursday. Bye, everybody. You guys sit tight.